What's going on, guys? So today we're going to be talking about NIO. So NIO earnings just came out, and even though their earnings were somewhat disappointing, we saw NIO shares rise today. So at one point, NIO shares were up almost 7%, and we're going to talk about why NIO shares are up on disappointing earnings. We're going to look at NIO earnings, we're going to take a look at NIO charts, and we're also going to take a look at 3 risks involved in investing in a company like NIO. Also, some of you guys have been asking about my puppies and how they were. Well, I had 4 puppies, and then I ended up selling them all, and I'm actually most likely keeping one of them. So I figured I would update you guys and show you how big she's grown. The other puppies are with a loving, caring family. So I just wanted to show you guys. Her name is Tiny. She was the smallest one out of all of them, but as you can see, she's getting big now. But yeah, that's all. That's the update. Don't forget, give me a thumbs up for this puppy. Also, leave me a comment in the comment section. Let me know what you guys thought about NIO earnings. And also, if you're new to this channel, don't forget, hit that notification bell, smash that subscribe button, and let's get this video started. So right here, we're going to be looking at NIO's first quarter earnings report. Quarterly total revenues reached $243.1 million. Quarterly deliveries of the ES8 reached 3,989 vehicles. So the deliveries of the ES8 reached 3,989 in the first quarter of 2019, compared with 7,980 vehicles delivered in the fourth quarter of 2018. So if you do the math, NIO delivered 3,991 more vehicles in the fourth quarter of 2018 versus the first quarter of 2019. On 2019 Q1, we got 3,900. 2018 Q4, we have 7,980. And 2018 Q3, we have 3,268. So the financial highlights for the first quarter of 2019. So vehicle sales were $228.8 million in the first quarter of 2018, representing a decrease of 54.6% from the fourth quarter of 2018. Vehicle margin was a negative 7.2% compared with a positive 3.7% in the fourth quarter of 2018. Total revenues were $243.1 million in the first quarter of 2019, representing a decrease of 52.5% from the fourth quarter of 2018. Gross margin was a negative 13.4% compared with a positive 0.4% in the fourth quarter of 2018. Loss from operations was $390 million in the first quarter of 2019, representing a decrease of 24.1% from the fourth quarter of 2018 and a 78.8% increase from the same period of 2018. Excluding share-based compensation expenses, adjusted loss from operations was $372.2 million in the first quarter of 2019, representing a decrease of 24.4% from the fourth quarter of 2018. Net loss was a $390.9 million in this quarter, representing a decrease of 25.1% from the previous quarter. Recent developments: deliveries in April 2019. So deliveries of the ES8 in April 2019 were 1,124 vehicles, which reflected a greater than anticipated slowdown in monthly deliveries, primarily due to the electric vehicle subsidy reduction announced in late March. So I did talk about that in the previous videos, as well as the slowdown of macroeconomic conditions in China, which has been exacerbated by the US-China trade war, particularly in the automotive sector, where wholesale passenger vehicle sales were down approximately 15% year to year from January to April 2019 compared to the same period last year. Another recent development is framework agreement with Beijing E-Town International Investment and Development Co. Ltd. In May, the company entered into a framework agreement with Beijing E-Town International Investment. So another recent development is manufacturing arrangements of the ES6. In April 2019, the company entered a manufacturing cooperation agreement with Zhanghuai Automobile Group, or JAC, for the manufacturing of the ES6, which is a supplement to the agreement that the company entered into with JAC in May 2016. The company pays JAC manufacturing fees on a per vehicle basis monthly and compensates JAC for its operating losses for the initial 3-year period after the start of production of the ES8 from April 10, 2018. The company may fund additional investments in equipment in the Hefei manufacturing plant of the JAC production of the ES6. So let's talk a little bit about revenues. vehicle sales. In the first quarter of 2019, 228.8 million, representing a decrease of 54.6% from the fourth quarter of 2018. The decrease in vehicle sales over the fourth quarter of 2018 was attributed to accelerated deliveries of the ES8 in the fourth quarter of 2018 in anticipation of EV subsidy reduction in China in 2019, as well as seasonal slowdown surrounding the Chinese New Year holidays in the first quarter of 2019. Other sales in the first quarter of 2019, which is 14.3 million, representing an increase of 76.4% from the fourth quarter of 2018. The increase in other sales over the fourth quarter of 2018 was mainly attributed to an increase in revenue derived from NIO Life merchandise and services provided in the first quarter of 2019. So total revenues was 243.1 million, representing a decrease of 52.5% from the fourth quarter of 2018. So the business outlook for the second quarter of 2019, the company expects deliveries of vehicles to be between 2,800 to 3,200 units, representing a decrease of approximately 19.8% to 29.8% from the first quarter of 2019. This outlook incorporates the planned deliveries of several hundreds ES6 in the June 2019. Total revenues to be between 169 million to 193 million, representing a decrease by approximately 20.7% to 30.5% from the first quarter of 2019. So if you think things were bad now, according to NIO, their business outlook and what the company expects is that the numbers will continue to decrease. This business outlook reflects the company's current and preliminary view on the business situation and market condition, which is subject to change. So looking at NIO charts, even though NIO was expected to release bad earnings and revenue and sales of total vehicles was expected to decrease, the reason why NIO shot up 6% in the morning was because earnings were better than expected. And as you can see right here, in the morning, NIO shot up all the way up to $4.14, almost immediately went back down to $3.88, and it's been a very volatile morning for NIO. Right now, NIO is sitting at $4.02. It's unclear whether we'll go below $4, but as of now, I do expect NIO to be a very volatile company. So we're going to talk about why NIO shot up 6% today. So today, shares traded higher Tuesday after the clean energy car maker and the key Tesla Inc. rival posted stronger than expected first quarter earnings, as it managed to shift more of its ES8 even as subsidies for the flagship sedan. So deliveries of the ES8 in the first quarter of 2019 exceeded the company's expectation despite headwinds from the EV subsidy reductions, slowing macroeconomic conditions, and increased competition and seasonal factors around the Chinese New Year holiday period, said CFO Louis Hesse. So looking ahead to the second quarter, we expect an even more challenging sales environment and anticipate overall sequential demand and deliveries to decrease as competition continues to accelerate and the general automobile market in China remains muted, he added. Against this backdrop, NIO is focusing on rolling out our ES6 nationwide and at the same time improving overall network utilization and operating efficiencies. The ES8 is a 7-seater SUV with a base price of 448,000 yuan, which is a figure that undercuts Elon Musk's Tesla Model X by around $60,000 American, in the world's biggest market for electric vehicles, where more than 1.6 million units are expected to be purchased this year. The Chinese government wants that figure to rise to 7 million units, around the fifth of its entire market, by 2025, and NIO is the biggest and the most well-funded of the more than 400 startups that are looking to capture the potential 18 billion in sales that change will bring. Tesla, for its part, is ready to price its Model 3 in the region to 300,000 to 350,000 yuan, according to the Bloomberg report published Tuesday, as it moves to build the flagship car, which generates more than a third of its revenues at a new gigafactory opening later this year in Shanghai. So NIO builds and sells its cars in China exclusively. Like its Palo Alto-based rival Tesla Inc., it operates on razor-thin margins. In the fourth quarter, NIO said it operated on a per-vehicle profit margin of 3.7%. In its most recent quarter, it lost money on each car it sold, operating at a margin of negative 7.2%. NIO lost nearly 391 million in its most recent quarter. The company said it was actively negotiating a commitment worth up to 1.4 billion from Beijing E-Town International Investments and Development Co. to build a new factory in Beijing. NIO does not manufacture its own cars and instead contracts out with a larger Chinese competitor. So that's a pretty scary number to look at. The fact that NIO loses money on each car sold, operating at a margin of negative 7.2%. I really hope things do change in the future, or I don't see how NIO can ever be profitable if they continue to operate at a margin of negative 7.2%. And here's the 3 scariest risks to consider before jumping onto NIO stock. Now, I don't want to scare you guys. I'm just here to bring you guys the news. I'm personally a NIO shareholder, and I plan on holding onto NIO for the long term. I'm going to either watch NIO burn to the ground or see it become one of the biggest EV industries in China. Let's move on to the 3 scariest risks to consider before jumping onto NIO stock. So NIO stock regulations and geopolitics. There are certainly major tailwinds for NIO stock. The Chinese government has the ambitious goal of having EVs account for roughly 20% of the country's total car sales by 2025. In fact, China is already the world's largest EV market, which saw sales jump an impressive 62% last year. Yet there's a nagging issue. The Chinese government has actually been pulling back on some support, and this is expected to hit NIO particularly hard in the current quarter. Note that this is projecting a plunge in revenues of 55.9% to 59.5% on sequential basis. And we've already talked about the fact that NIO expects to have a worse quarter in the second quarter of 2019, which is pretty much what they touch up here. So in the meantime, the company is also likely to feel some pain from the emerging trade war between US and China. This is likely to weigh on growth in China and could mean less demand for NIO cars. And finally, the competitive environment for EVs is fierce in the country. Just some of the operators include BYD, Beijing Electric, and Geely Automotive, and it also looks like Tesla will make a big play for the market soon. Another one is NIO's business model. NIO has borrowed literally from Tesla's playbook, but there are some notable differences. For example, NIO outsources its manufacturing to JAC. While this has accelerated the development, there are some major drawbacks. Consider the company must still buy its own components and supplies. This creates an odd situation. As NIO scales, the company does not benefit much from the economies of scale. The result is that margins are constrained. Another one is its valuations and funding. The valuation for NIO stock remains on the high side, with the price to sales ratio at about 5.7 times. The company also continues to lose money. As for last year, the net loss came to 1.4 billion, and it looks like profitability remains far off. For example, Wall Street is forecasting a net loss of $6.08 per share for this year. It's true that NIO has major backers like Tencent that can easily fund the company, but then again, this will mean more dilution probably soon, as the company will likely need to do another capital raise to cover the burn. Anyways, that's it for this video. I hope you guys enjoyed this video. If you did, don't forget, give us a thumbs up. If you're new to this channel, hit that notification bell, smash that subscribe button. Also, let me know what you thought about this video. Let me know what you thought about NIO earnings. And that's it for now, guys. Bye-bye.